Hello friends, in this video we are going to discuss financial markets. Financial markets is a very important concept in the field of commerce. It brings up a concept of coordination amongst people who have surplus money and who have the requirement of money. When there is a requirement of money by someone, that person is called as an expected borrower. And a person who has surplus, extra money with him as a saving, he can become a lender. So basically, a financial market comes up with a concept of coordinating, connecting the borrowers and the lenders together. जिनके पास पैसा ज्यादा है और जिनके पास पैसे की रिक्वायरमेंट है, उन दोनों को एक जगह पर लाकर जोड़ देने का काम फाइनेंशियल मार्केट्स करते हैं. Financial markets in our country basically are very, very important to keep the day-to-day things going on, and especially for the national progress of any country. So my friends, when you talk about financial markets can be basically segmented into two categories, two segments, and the first segment will be called as the money market. And the second segment is the capital market. Money market is the mudra bazaar and the capital market is the punji bazaar. Basically, in दोनों में difference क्या है? What is the basic distinguish between these two, money and the capital market? Money market deals in the short-term requirement of funds. Whenever any institution, any company requires a short-term fund, it goes to the money market. And whenever there is a long-term requirement, you may go to the capital market. Basically, it's simple that whenever a company requires working capital requirements, like to pay salaries and all, and they don't have the funds in time, they may go to the money market. And when the company wants funds for longer period of time, when basically the funds are required for a longer period of time to build up factories and plants and set up new concepts, that time the financial markets, the capital market is required. So money market plays in the short-term requirements and the capital market plays in the medium-term and long-term requirements. When we say short-term could be from a single day to 1 year roughly, but there is no specific Lakshman Rekha to this. However, more than 1 year, the requirement of funds for more than 1 year, 2 year, 5 year, 10 year, 20 year, 25 years, a longer run could be dealt in the capital market. So money market and capital market has this major distinguish between both of them. Let us now understand money market or the mudra bazaar. Money market, as we discussed, is fulfilling the short-term requirements of companies, governments, institutions. Basically, money market deals in all those financial assets जिनका maturity period, the maturity period of those is less than 1 year. एक साल के अंदर मैच्योर होने वाले जो भी फाइनेंशियल एसेट्स हैं, उनके अंदर मनी मार्केट या मुद्रा बाजार डील करता है. तो मनी मार्केट fulfills the requirement in the short run, for the working capital requirements in the short run, and money market facilitates credit instruments like the bills of exchange, promissory notes, the commercial papers, and certificate of deposits. Money market is not a place. It's basically a network that facilitates the movement of money between the borrower and the lender. In India, money market participants are the Reserve Bank of India, the commercial banks, the cooperative banks, and some of the non-banking financial companies and financial institutions. My friends, money market के constituents, there are different varieties of constituents of money market. Let us discuss the constituents of money market. The first constituent of money market is the call money market. Call money market समझने के लिए एक बहुत simple सी example देना चाहूँगा कि suppose you take a hand loan from your friend. When you take a hand loan from your friend for let's say 1,000 rupees, you have to pay the money ASAP, as soon as possible. However, it may be ASAP or maybe आपका friend कल आपसे पैसा वापस मांग ले, तो आपको उस पैसे को वापस करना है, तो ही आपकी क्रेडिबिलिटी बनी रहेगी उस फ्रेंड के सामने. उसी तरह से कॉल मनी मार्केट, जो कि बैंकिंग सेक्टर में बहुत ज्यादा महत्वपूर्ण है, इंपॉर्टेंट है, कॉल्ड एज इंटर बैंकिंग कॉल मनी मार्केट, बेसिकली डील्स इन एक्सचेंज ऑफ फंड्स अमंग्स बैंक्स. कॉल मनी मार्केट में जो ड्यूरेशन है लोन की, वो 1 दिन से लेकर मैक्सिमम 15 दिन की हो सकती है. इस सिंपल कंसेप्ट में जब बैंक्स को बेसिकली फंड्स की रिक्वायरमेंट होती है, खासकर जब रीजन ऐसा होता है कि CRR, कैश रिजर्व रेशियो मेंटेन करना होता है, जो कि RBI नॉर्म्स के हिसाब से मेंटेन करना होता है. अगर मेंटेन नहीं किया तो पेनल्टी आ सकती है. तो ऐसी पेनल्टी को अवॉइड करने के लिए, या फिर whenever there is extra expected payments taken out by the investors, the bank account holders, जब बैंक अकाउंट होल्डर्स आकर अचानक से बहुत सारा पैसा विड्रॉ कर लेते हैं, उस समय की रिक्वायरमेंट्स जो शॉर्ट टर्म है, these kind of short term requirements को फुलफिल करने के लिए बैंक will not go and liquidate the big assets, the fixed assets, and therefore to fulfill this very short term requirement, बैंक्स के बीच में एक दूसरे से लोन लेने की जो ये प्रथा है, इसे कॉल मनी मार्केट कहा जाता है. इन कंसेप्ट के अंदर whenever this money is transferred or lent, there is an interest rate decided amongst the banks that is also called as the call rate. However, इस समय जब भी कॉल किया जाए, लेंडर ने जब भी कॉल किया तो बोरोवर बैंक को वो पैसे इमीडिएटली वापस करने होते हैं, and that is called as the call money market. Secondly is the treasury bill market. Whenever the government requires money, it requires money for the short term. Basically, they approach the Reserve Bank of India, which is also called the bankers of the government. The Reserve Bank of India then issues treasury bills in the form of promissory notes. When it issues treasury bills, these treasury bills are for a period of not more than 364 days. These treasury bills are issued at a price which is below the face value. For example, the face value of a treasury bill is 50,000 rupees. The bill will be issued at a lower price than it. And when it matures within the 364-day period, it could be a 90-day, a 180-day treasury bill, or a 364-day treasury bill. The difference between the issue price and the face price will be basically the interest earned by the borrower. So treasury bills are issued by the RBI to make sure that the government requirements are fulfilled in the short run. Next is commercial papers. Similar to the treasury bills, whenever the corporates, the companies require money in the shorter run, they may approach the market in the way of issuing commercial papers. Commercial papers can be issued from 90 days to 1 year's period, and this can be invested by people. And similar to treasury bills, there is a fulfillment of a requirement of a short-term money, which is there amongst the corporates. Next is the trade bill. Trade bill is whenever there is a trade between a seller and a purchaser, there is normally a concept of credit. During this concept of credit, giving credit, a bill of exchange is signed. The bill of exchange is signed by the borrower, who actually makes it an instrument in the pocket of the lender to go and get it discounted. This piece of paper, which is there with him, with the lender, makes him to go to the bank and discount this bill with the bank to get immediate cash. जैसे भी पैसे की रिक्वायरमेंट हो, इस पीस ऑफ पेपर को ले जाकर बैंक में जब डिस्काउंट किया जाता है, उस कारण से एक शॉर्ट टर्म रिक्वायरमेंट फुलफिल की जा सकती है, और उस सिचुएशन को इस कारण से कहा जाता है कमर्शियल बिल्स भी. सो डिस्काउंटिंग ऑफ ट्रेड बिल्स लीड्स टू creating money in the short-term requirement fulfillment. Next is certificate of deposit. Certificate of deposit is issued from 91 days to a period of 1 year by commercial banks and some financial institutions, wherein people can deposit money with the banks and the financial institutions, and that way the banks fulfill their short-term requirements. Let us now discuss capital markets. Capital markets मतलब पूंजी बाजार. Capital market, जैसे कि हमने पहले डिस्कस किया, is basically for fulfilling the long-term requirements of any business. For example, एक बहुत बड़ी फैक्ट्री डालनी है, एक बहुत बड़ा प्लांट ओपन करना है, एक बिजनेस को सेटअप करना है, उस समय काफी ज्यादा रिक्वायरमेंट होता है पैसे का, और उस पैसे को इमीडिएटली निकालकर वापस भी नहीं दिया जा सकता, and therefore the requirement is long-term. And therefore, in this case of a long-term requirement, basically the capital markets come into picture. Capital markets also include the foreign markets through which the banks and commercial banks and organizations get loans in the longer run. However, capital markets can be further classified into two categories. First is called as the primary market, and the second is the secondary market. Primary market is basically wherein new securities are issued by the companies. It is therefore also called as the new issue market. However, the secondary market, wherein the securities issued in the primary market are dealt with, are called as stock exchange or secondary market, popular name being stock exchange and stock markets. However, the companies go to the primary market to issue fresh securities. These fresh securities can be issued for the longer run of period of time by 2-3 ways. One could be a private placement. Whenever a company wants to place its shares amongst the private people they know, it could be called as private placement. But the other way could be a public offer. When a company wants to issue shares to the public in the country, it is called as a public offer. So whenever a company issues its securities for the first time, it is called as IPO, initial public offer. However, whenever a company issues shares and securities which are new, but they are issued by the existing old company, then this issue is called as FPO, that is follow-on public offer. So companies can come up in the primary market, fulfill the compliances of SEBI, Securities Exchange Board of India, and issue shares through the IPO and the FPO and fulfill their long-term requirements. Intermediaries like merchant bankers, brokers to an issue, registrar, share transfer agent, underwriters, debentures trustees, and others are there as participants in the primary market, which we will deal in the next video. Secondary market. Secondary market is popularly known as the stock market, as we discussed. इसकी जड़ कहां से पैदा हुई या आया कहां से? Basically, equity shares are issued in the primary market. Equity shares, अगर आप जानते हैं, the equity shares are irredeemable. That means the company will not give you your money back unless and until the company will dissolve itself. And therefore, if I'm an investor and I will invest money, it will be very difficult for me to invest, because whenever I go to the company will say, no, we cannot give you the money back. And therefore, it was senseless that to invest money and wait for the company to wind up. And that's the reason why a secondary market concept, the stock market or stock exchange concept was developed. And finally, stock market is a place where existing securities, the securities issued in the primary market, are traded, dealt with, so that as an investor, I can sell my securities and get my liquid money back. And also, the company does not have to pay the money back. So, stock market or secondary market makes sure that the securities which are issued in the primary market are traded well with transparency. It provides a continuous market for all those listed securities, and these securities and shares are traded in the stock markets in the country, like especially National Stock Exchange and Bombay Stock Exchange in India. These markets facilitate the trading. However, the participants in the secondary market are stockbrokers. Stockbrokers are the people who are authorized to trade in the security market called as stock exchanges. You and I, even online when we trade, we cannot actually trade directly with the stock market. We have to trade through a stockbroker who is authorized to do so. And therefore, secondary market facilitates an amazing facility for any investor to earn money as well, but to also get its liquidity done whenever required. So, stock markets not only play a major role in facilitating the trading of securities, but it also plays a major role in promoting the primary market. When the secondary market does well, automatically the confidence of people raises up, and IPOs can be initiated by the companies, and therefore the primary market also boosts. So therefore, stock markets are very important, and they are also called as the barometers of the economy. Let us now discuss about the distinguish between the primary market and the secondary market. The primary market, as we discussed, deals in the new issue securities, and the secondary market deals in the existing securities. The primary market facilitates the long run development of capital, creation of capital. However, the secondary market makes sure that it facilitates a transparent and a continuous market. In the primary market, the major participants are the merchant bankers, the bankers to an issue, the share transfer agents, the underwriters. However, in the secondary market, the major participants are the stockbrokers and, of course, the individual investors. So, here to summarize, let us try to find out that we have discussed financial markets in this video. And basically, financial markets, when we started, we discussed they are of two types, the money market and the capital market. Here we would like to conclude by revising money market and capital market, the differentiation between both of them. So money market relates to short-term requirements of funds, and capital market relates to long-term requirements and medium-term requirements of funds. The participants in the money market are the Reserve Bank of India, the commercial banks, the cooperative banks, the non-banking financial companies. However, the participants in the capital market are merchant bankers, brokers to an issue, bankers to an issue, stockbrokers, and all these. Money market deals in trade bills, promissory notes, bills of exchange, and capital market deals in shares and debentures. Money market is basically regulated by the Reserve Bank of India, RBI, and capital market is regulated by the SEBI, Securities Exchange Board of India. I hope you find the information in this video valuable. Thank you so much for your patient listening. Thank you.